Ladies and gentlemen, Kay Kim here. Welcome to the Daily Update. Hope you guys had a good day trading today. Market is down about 1.5% on the S&P. It looks like the Nasdaq and Semi dragged the market down today. Nasdaq's down 3%. Semi's down 4%. Small caps also down 3%. Energy's down close to 5% there. Biotech's down 3%. Transport's flat. Emerging market about 2%. Only thing green today were the banks today. I was looking through my positions and I noticed that bank stocks were up like a couple percentage while everything else was red today. Bitcoin also negative about 2.3% there. And looks like VIX did pop today. And Treasury bond continues to make a move to the downside. So let's stick with the S&P 500 Spider 65-minute chart here. So this is where we closed yesterday. And so you can see that we saw a gap down this morning. And then that gap down was supported by what? The short-term moving average, which has been acting as support all throughout yesterday because we saw that gap down. That short-term acted as support. We did see that thrust. Bears trying one more time this morning, gapping it down, and bulls trying it again to what? To get up, supported by the short-term moving average. But I think when this gap wasn't fully filled, as you can see here, right? The gap wasn't fully filled. We left a little bit of that down gap. It's a very small size. But with that, that selling pressure continued on the 5th hour. We lost that short term. Once we lost the short term, it only makes sense that the bears are going to retest the next level support, which is 390, 391-ish area. So let's kind of zoom out and maybe we'll get a better picture of where we at in the overall sentiment here. So you can see when we look at a bigger picture, looking at more of a kind of the short to mid-term here, and you can see that one thing we have to understand is this market did cultivate that higher highs here in the midterm, short to mid-term. And the market is basically trying to discover that higher low. And that's what we're trying to figure out. Because the market doesn't go straight up. Market is going to have a up move and it's going to pull back. And it wants to discover the higher low. So currently we did lose my short-term moving average. And because we're still holding, above my, gap area here at 390, 389-ish. And so, and we're holding this important pivot, right? We talked about this level here, right? This level right here. 390 and 389-ish area. That's important support because that level has been prior resistance, kind of like a confluence zone there. And market likes to break above these kind of levels and then likes to come down and retest that as new support before making a move. Not only that, that's a level where we see the gap is still in that vicinity. So kind of like a double support in that vicinity. So I don't quite want to give benefit of the doubt to the sellers in the short term. I'll say neutral in the short term and long term, obviously mid-term bullish. So neutral going into tomorrow in the short term, bullish in the mid-term going into tomorrow. So here's the thing here. If the sellers really want to make some damage, they really want to they got 3 gaps that needs to be filled. This gap, this gap, this gap. So if the seller is going to try to just come down and fill all these gaps, it's going to be a hard work, and that at some point buyers going to show up, bring it back up. That's why these gaps going to provide cushion, support, right? Best bet for the sellers. The bears is gapping it down and turn this into turn it into a island top reversal and then coming all the way down here and challenge this gap. And I'm not sure if it's going to fill that gap because my midterm moving average is residing in that vicinity. So that will be the best case scenario for sellers if they really want to turn this into more of a short-term downtrend and inflict more fear into the market. If not, if bears just come down and fill this gap, there will be support. Buyers will show up because why? Because we're on a midterm uptrend. There will be bounces on these gaps here. So let's check out that oscillator. Maybe we'll get a little bit of better idea here. So we talked about that on my analysis last night. Even though, you know, all the price action looked bullish, you see right here, this was last night's sentiment right here. So this is what it looked like yesterday when I was doing my analysis on the last night's analysis. This is what it looked like. And so as far as the price action is concerned, you know, you can see we got higher highs and higher lows. We're above, we just caught that short-term moving average. We feel that down gap from yesterday morning. We thrusted higher. We held up on the last hour. Everything looked bullish as far as the price action is concerned. But my oscillator was giving me a little bit of a bearish vibe. And that's the word that I use, a little bit of bearish vibe. And obviously nobody can see the future. I couldn't just say that, well, we're just going to go straight down tomorrow, because none of us can see, you know, in 100% certainty what's going to happen next day. But I think what I was kind of worried about was that this oscillator did not cross backed up yet. And we're still kind of in that, you know what I'm saying, that bearish divergence territory, as the oscillator is still making lower low here, while the price action is making higher low. That in itself, this right here, right, lower low on the oscillator, higher low on the price action, that's what we call hidden divergence. Hidden divergence, right? So you can see we not cultivating higher low on the oscillator while the price action did. On top of that, this was already weighing down a little bit because of the bearish divergence here, and that's a, you know, definitive bearish divergence. Nothing hidden about that, right? We got the higher high here and lower high. So we got that bearish divergence and then hidden divergence. And so things, and again, things could have, if we would have continued higher, we talked about it on the last night's video, that if we saw first 2 hours of move to the upside today, then we would have seen this thing crossing back up and would have gotten all the way back up here. But we gapped down. I think that once that gap down occurred and was not able to fill this gap, and especially the 5th and 6th hour decline, you can see that the oscillator actually did a little whipsawing action here, a little back and forth, and then we lost it back down. So there is short-term bearish sentiment looking at my oscillator, right? So there's a couple of things can happen here going into tomorrow. The oscillator is coming down, and buyers can actually like move this price sideways for entire day tomorrow. Just moving sideways, up and down, just keep the price hanging above 393, nice, somewhere in that, but just keep it above there all day long without so much momentum to the downside. You will see this oscillator coming all the way down and get into the oversold level, right? Because the last time we saw the oversold level here, we did see a very swift move to the upside. And that's a strategy that the buyer is going to try to implement tomorrow. If bears just come down and fill this gap, or the price just moves sideways for an entire day, you will see this oscillator coming all the way back down, hitting that oversold. And then either like a last hour on Friday or Monday early morning, bull is going to try to bring it back up once that oscillator gets all the way back down to the oversold level. You guys enjoy your evening, and good luck trading tomorrow.